Hi everyone, I'm Al Brooks, and I was in the chat room today until 9 o'clock Pacific time, which was bar 30, and I want to just go over what I saw taking place today. On the open, the first bar of the day was a bear bar, but it had a big tail, and the second bar was a bear bar as well. The bears were hoping that this was the start of a bear trend that would last all day, but with those big tails and the big rally at the end of yesterday, it's more likely a minor reversal. We're probably going to get down at least to the moving average. We're close to the moving average. We have two bear bars. We should get there. We had three consecutive bear bars, bar 3. So for the bulls, they're hoping it's a high 1 bull flag after this bull trend. Probably will be sellers at the high of 3, so I would not buy above 3. And then the bears, they're getting an early bear trend with 3 consecutive bear bars, but the bear bars are not big. They're not closing on their lows. Bar 4 is a pullback in that bear trend, but it has a bull body. Yes, I think we're going to go below bar 4. I think we're going to go below the moving average, but I'm not confident that we will go much lower, so I would not sell below bar 4. We got a couple legs down. We tried to reverse up from the moving average bar 7, but it has a prominent tail, a small body. It's a high 2 buy, a second buy, 1 and 2, but 4 of the first 6 bars, 5 of the first 6 bars have bear bodies, so it's probably a minor reversal. The bears tried to get a lower high double top with 9 and 4. They have an outside down bar, but to me this looks like a limit order market. It looks like traders are buying at new lows, and they're buying below bars, they're selling above bars, and looking for scalps. These lines are 5 points apart, and therefore, it's difficult to make even 5 points when the bars are this size. Most traders should simply wait for the bars to get bigger or wait for better signals. The bulls at this point now have a wedge. We have 3 reversals up, 1, 2, and 3, and it's at the moving average. It's about a 50% retracement of that rally, but it's only a doji bar, and 6 of the first 8 bars have bear bodies, so it's not a very strong buy. You could wait for 11, bar 11, a bull bar closing near its high. It's not especially big. It's a possible low of the day, a possible rally. You could buy, or you could wait for the breakout above the high of the day. Given the bad buy signal bar and all the bear bars, I think it's probably better to wait. And you can see here we have 2 decent-sized bull bars, 11 and 12, closing near their highs. But the rally could not even get back to the open of the day. So bar 12, the end of the first hour, we opened here, we closed there, and the first bar was a bear bar, so that's not especially good for the bulls. The bears made another attempt at a double top, this high, and another outside down bar. That's a reasonable sell, taking a chance that we'll break below the wedge and go for a measured move down. I said in the room today that when you have these wedge bull flags on the open and the market breaks below it, 50% of the time, you'll go down for a measured move based upon the height of the wedge, and 50% of the time, there'll be buyers below and you'll reverse up. We broke out 14 below that low, but 14 closed above that low, so that's not good for the bears hoping for a bear trend. And in 15, a bigger bear bar, closing below 10, but did not close below 14, and therefore it's not a very strong sell signal bar. It's fine to sell at the low of a bear trend if the bear trend is strong, but this is not strong. 14 did not close on its low, did not close below 10. 15 closed near its low, but could not close below 14. If a bear trend is not strong, it's usually better not to sell at the low. It's usually better to sell rallies. The bulls got a surprisingly good-looking bull bar 16, a big bull bar closing on its high. And we have a wedge, 1, 2, and 3. We have a breakup below the wedge and a reversal up. That's a common reversal pattern on the open, so it's an okay swing. I talked about it as being a Walmart trade where you buy 1 tick above, you place a stop 1 tick below, and you place a limit order to take profits 20 points above, which is up there, and go to Walmart and come back in a couple hours, and chances are you'll do just fine. So if you bought that and had a limit order up here, came back in a couple hours, you would have been disappointed that we've only gone up about 10 points after a couple of hours. Today's range was small. I talked about how in here, the range was only about 15 points tall, 20 points tall, which is about half of an average day's range. And you can see on the daily chart over here, that little bear doji is today. It's a small range, and I said the range would probably double. I said it could double in one of three ways. It could break above the upside and go up for a measured move. It could break below the downside and fall for a measured move, or it could go a little bit above and a little bit below, and then close somewhere in the middle. It broke above the upside, but look at the breakout bar, bar 33. It did not close on its high. It did not close far above the open. In fact, it looks like it closed right above the earlier high. And then look at the follow through, a bear bar. So for the bulls, it's a bull trend. In a bull trend, since here we're getting higher lows, we're getting higher highs, and then we have a breakout. We have a high, a higher high, another higher high. We have a breakout here to a new high of the day. But it's not strongly bullish. The bars are not all that big. They're not closing on their highs. So therefore, this bull trend is not a strong type of bull trend. And when you get a bull trend that's not all that strong, normally it's not going to last all day. If we start to get gaps that remain open, it could last all day, but that's not what's happening. We broke above here, and this body overlapped these bodies. So we did not even get a gap between the bodies. And then we have another breakout, another breakout. Here we have a body gap. There's a gap between the body here and the breakout point bodies here. That's good. But these other breakouts did not have even body gaps. And if you're not getting at least two body gaps in a bull trend, it's usually not going to last all day. So we know this is probably not going to last all day. The bars are small, and therefore it's difficult for even limit order bears to make money selling at new highs. So if a bear sold this high and tried to exit with 5 points, they did not make money. If they sold this high and tried to exit with 5 points, did not make money. So you can't sell on the way up, even with limit orders. However, buying is not all that good either. Normally, if you have a good swing buy, you're going to get filled within a couple hours. You'll get your 20 points within a couple hours. And that's not happening here. So not good for the bears, but for the bulls, it's not particularly good either. And when a rally is not all that strong, rather than buying with the stop at a new high and betting the breakout will lead to a big trend, it's better to buy pullbacks. So the bulls who bought with the stop, one tick above that, are disappointed by this. The bulls who bought with a stop, one tick above the high of the day, are disappointed by that tail and by the bear bars. And these shorts, I would not take these shorts. It's a second reversal short. You can call it a wedge, 3 legs up, 1, 2, 3. It's a low to top, second reversal down from the new high, a bear bar closing near its low. But it's still a small pullback bull trend. The pullbacks are small, and therefore it's not a particularly good short. You could take a chance and sell. If you did, you would exit above a bull bar closing near its high, above 39. And if you're a bull, and if you exited below any bear bar, that or that, and it's reasonable to exit below a bear bar closing near its low, you can buy back above a bull bar closing near its high. So reasonable for bulls to exit below that and buy again there. And then this, they barely made 5 points. Would you exit below a bull bar? I would not. I would exit the size of a scalp below a bull bar, or I'd exit one tick below a bear bar closing below its midpoint. If you exited below 43, right, you'd buy again above a bull bar closing near its high, 46. I want to show something on a PowerPoint in a minute about this. It's still a small pullback bull trend, but the bulls are not making much money. They've had 2-3 hours to make 20 points. They could not. So something is wrong with this trend. And I suspect we're going to come down to test near the open or near the low. And we've tested below the open, but not all the way down to the low. We tested the 60-minute moving average, this dashed line, which has been important resistance all day. But up here, what do? Well, let me put up that PowerPoint over here. This is today. And this is a breakout above a wedge. We have a wedge here, 1, 2, and 3. And we tried to break above the bull channel here, failed. And then we tried to break above the top of the wedge here and failed. You could sell below this bear bar, or you could take a second short below that. Neither one is all that good. We're in a tight trading range at this point. Higher probability to sell below a bear bar closing near its low and sell below that. We have another bear bar closing near its low there. You could sell below that. We have a third one here. But as I said, this low is right at the 60-minute moving average, which is not good if you're a bear. And we have a big tail here, a big tail here. If you did take these shorts, I'd get out right there. And we close just below the open of the day. So pretty much a bear doji bar on the day. In summary, we had a wedge attempt here, but a bad buy signal bar and too many bear bars. We broke below it. The breakout failed. We have a good buy signal bar, a reasonable buy for a swing up. And on the way up, there's nothing to sell. You would only buy. If you exited below bear bars, you'd buy again above bull bars closing near their highs. And then here we tried to break above the channel. It failed. Here we broke below the channel. And now we're reversing down a second time. Doji bars, not great, but we're probably going to come down and test the open of the day at a minimum. So you could take those shorts, or you could wait for bear bars closing near their lows. Overall, a very quiet day, a small range day. All right, and that's it. I appreciate it. Have a good night.